Greetings to you all and welcome to the 11th of this training program. So yesterday we talked about fair value gaps, right? We have already talked about other blocks. We have talked about fair value gaps, and now we are going to talk about breaker blocks and mitigation blocks. Okay, so quickly tell me on the chat what is a breaker block and what is a mitigation block. We have breaker blocks. We have breaker blocks. Under breaker blocks, we have bullish breakers. And we have a bearish breaker, all right? And then the next one, we have mitigation blocks. Mitigation. Mitigation blocks. Now, all these blocks I'm teaching you guys, you're the one now to narrow it down with your own practice. You say, okay, I'm going to be trading only breaker blocks. I'm going to be trading only mitigation blocks. I'm going to be trading only bullish or bearish order blocks. It's up to you, but it's good that you understand what is happening so that tomorrow when you see price respecting a mitigation block, you should not be surprised. Or you see price respecting a breaker block, you should not be surprised. All right. So let's see. A breaker block is a failed order block. Nice. A breaker block is a failed order block. Good. That's how easy it is to define a breaker block. All right. It is very easy. Remember, a breaker block is a good order block that has failed. Now, you need to start to understand that, okay, if a good order block can fail, then it becomes a breaker block. That's why when we're talking about trading, we're talking about probabilities, all right? You're never going to see something that works 100%. Why? Because if it works 100%, then we are not going to have what we call a breaker block, all right? So this is what we call here. This is a bearish order block that we have here. This is your bearish OB, all right? Now, what we're expecting is that if price comes back to this, it should continue selling down. You know why price is coming back to it. You know why price is coming back to that other block. But now, if price comes back to it, now, and then let's say price does something like this, okay? Price tries to come back to it, and we have something like this. Price comes, instead of respecting it, it does what? It just breaks through it like that. It breaks through it, and then it continues to go up. Now, this zone where we had which was our very good order block, now becomes a breaker. It's just like the explanation that I gave to you guys concerning what? Support and resistance. Now, this order block here was a resistance area. All right, it was a resistance zone. Now, since the resistance has failed, it has now to become a support. So when price comes back to this now, to this order block, we now call it a breaker block. All right, we expect price now to bounce from it. It's not like a break and retest. It is a resistance area now that is being retested as a support now to continue higher. Okay, remember, we buy at support and we sell at resistance. So if resistance fails, then that resistance becomes support, and what we are going to do at support is to buy. All right, it is that simple. Take note of the definition. A breaker block is an order block that has failed. It's an order block that has been broken through. All right, it becomes your breaker. Now, for the bearish for a bearish breaker, it is simply price pushing, price creates a bullish order block, right? Price creates a bullish order block like that. So what do we have here? The last down close candle here is supposed to be our bullish order block, right? So we have a couple of bullish candles here, actually, all right? We have a couple of bullish candles, and then now we're expecting that, okay, since we're having this, remember, I talked about the confirmations of another block, right? Things that makes another block to be strong. So what are we expecting here right now? We're expecting that, okay, if the market should come back to this other block, what should happen? It should buy, right? It should come into the other block and buy. But what happens? Price comes and just breaks through it and goes down. So what has happened here is what? This was an area of support. All right, that was an area of support, and now it is an area of resistance. It's just the same like what? You have an area of support, price comes, break it. Now this area becomes a resistance that price should continue lower. So these other blocks are areas of support and resistance. Remember I mentioned as confirmations of other blocks that a good other block is in an area of resistance or support. Okay, a good bullish order block should be found in an area where there is a support. A good bearish order block should be found in an area where there is resistance, and you have the other characteristics that makes an order block to be strong, right? Now this area, which was another block which we were expecting price to buy from, now becomes a support. It becomes a resistance zone. We now expect price to come back to it and sell off, right? It is that simple. It is that simple for a breaker block. All right, we are going to look for some examples on the chart. Now let's talk about mitigation blocks. Now from the word mitigation, it simply means it's a zone or another block that has already been mitigated. Okay, now you can have something like this. Let me try to draw one. All right, we have the bullish candle here. Okay, we have this bullish candle. Price was first of all bullish, okay, and then it started moving lower. Okay, it started moving lower. We have something like this. So we have something like that. Okay, this, and then this. Now, with what I've just explained, okay, this is going to be what? Our bearish order block, right? But now, if you notice that there's a subsequent bullish candle that has traded back into the range of this candle. You have a candle that have traded into the range of this candle. So this candle now is not like the highest candle here. All right, this is not the highest candle. This one it is. This one is the highest. This one is not. All right, but this one has already traded back here. This means that the buyers have come back, or it should have already mitigated their losses here by pushing price back to the other block. So what happens here is that this new bullish candle becomes our mitigation. It has already mitigated the positions that were on this first order block. All right, so this is now our mitigation. Now in a line chart form, it's going to look something like this. In the line chart form, is going to look like this. We have price moving up, okay, price moving up, and then we have something like this. Now this is what? This is our other block here, and then what has happened? This is supposed to be our other block at this point. We're supposed to have our other block here, which is the last bullish candle right here, right? Now we notice that this move has already mitigated the other block. So now this is our new mitigation area. Okay, this move has already mitigated this one. So this one now is our mitigation block. All right. Now some people, they take the whole of this pullback here like that, because still it can be a single candle like that on the higher time frame. Maybe it is 4-hour candle. Maybe this is a whole 4-hour candle, and we have 4 1-hour candles here. What I'm simply saying is this, okay? You can have something like this. We can have 1, 2, 3, 4 bullish candles here. And in the 4-hour is just one bullish candle. It therefore still means this entire area is our mitigation zone. Okay, it's our mitigation zone. We don't expect, we are now, our focus have shifted from the origin movement here to this one. Okay, that's what is called a mitigation block. Now, let's talk about a breaker block confirmation. Now, with a breaker block, all right, it is what? You notice that price has broken structure here, right? Price has broken structure here to the upside. It therefore means we can actually pinpoint our bullish order block here and expect price to react to it. Okay, now what is going to happen is this: price is going to do what? Price is going to come instead of respecting it, and it breaks through. What is this? We had a break of structure here. That's the difference between a mitigation. All right, this one actually broke structure to the upside, confirming this as a good order block, and therefore price does what? It just come and break through it. Now, what this break of structure above here is not just normal break of structure. This one was to clear the liquidity that was above this high. All right, that's why we call it a liquidity grab, because it has shown its intentions to us that it was not breaking structure to continue up. It was taking that high, which it was grabbing the liquidity to continue lower. Do you guys understand? So this break of structure here has changed. It's not a break of structure anymore. Why? Because price has shown us that I wasn't breaking structure to continue higher. I was just clearing the liquidity that was above this high. All right, and now I'm going down. So we have our bullish order block here that has failed. What do we expect now? We expect price to come back, retest it, and continue lower, right? Now, sometimes price will not just come like this directly to it. Sometimes it's going to do something like this, and then before it comes back. And this is a good way, all right? This is one of the best ways to get a good breaker block. Now, when it happens like that, price comes up, it grabs the liquidity above this high, tap into your breaker zone, and then continue going down. All right, so this is a good breaker in a line chart. In a line chart, all right. If it were candles, it's just that this is too much. I can't be drawing small boxes all around like that. All right, we're going to look at it on the chart, but this is how it looks like on a line chart. It's the same in a downtrend. Price does what? It clearly breaks structure here, and we're like, okay, we have now our good order block here, so price should continue lower. Price should retest the other block and keep going down. What happens? As it retests the other block, it doesn't go lower, it just breaks through. Now, this is now our other, this bearish order block we had becomes our breaker block. Now, this break of structure that we were expecting here is not a break of structure. Now, price has revealed to us that it was just grabbing liquidity to keep going higher. Okay, it's just like you are feeding a fowl, right? You are feeding a fowl, you are throwing corn to the fowl to catch it. All right. Now, somebody will just see from a distance, say, okay, this man is feeding his fowl. That's nice. He's feeding his fowl to get big and all that. Meanwhile, he doesn't know your agenda. All right. Now, your agenda will only be revealed when you catch the fowl and you slaughter it. You will not say, this man was throwing that corn like that just to catch that fowl. That's exactly what is happening here. From the start, we see it to be a break of structure, but the moment price comes back and break like that, it now becomes a liquidity grab. Yeah, the market was trained on to catch you people. All right, I think that's good explanation already. Price returns to the breaker and we continue higher. Okay, now with time, I'm going to discuss with you guys because I know a lot of you will be asking me this question, or some will not be thinking about it. Like, okay, is it that we don't have another block here or not? Right? So many of you might have been thinking to ask that, okay, why should price respect the breaker and not the other block? That one is a question that I'll answer subsequently. All right. Now, remember, if this order block here is very good, if this was a very good order block, and price creates this incomplete pullback towards it, it's going to respect it. But now, if this pullback here traded back like that into this breaker, let me show you a clean example. All right, good. So we have a break, and then this pullback just comes like that, and then goes down. Now, if this other block here is still around, is still there, then price will do what? Price will respect the other block and then go down. Okay, so this first pullback that comes after price has broken your breaker block is always very dangerous to trade in. You have to either wait to see if it's going to respect or it's going to break through. And for you waiting, you can wait for confirmation on the lower time frame, which is what? A simple break-off structure to the downside to confirm that price is truly respecting this. If not, you can go to the other block. If at all, this other block here is a very strong one. Okay, so I think that's good explanation there. Let's now go to the lower time there to the chart and try to see if we're going to see anything like a good breaker block. All right, now oh my god. Okay, I believe we can see that price break structure here to the upside, right? We can also see that we have healthy candles. So we can have this one to be our bullish order block. So what happens? Price comes to it, respect it, and it goes down. Also here, this is another block. It becomes a breaker. Price respects it and goes and keeps going down. I'm also going to show you what a mitigation is, and right, nice order block here. Let's see. I want to show you guys more breaker blocks. Okay. Now it's not something you're gonna see all the time on your chart, but it's worth it. Okay, it's worth it. Now this is no, not very clean. Now this is a mitigation here. Look at this. This was our last up close candle, right? Before price went down to breaking structure. But now you notice that within that move, there was a candle that went back in and respected that candle. So that bullish candle now is our mitigation block. Price comes back to it and it sells off. It's an area that has been mitigated, that price, or a zone that has been mitigated, price goes back to it, and then there is one here. It's that price has not come back to it yet, and it's a good breaker zone. We have that other block like that. It's a good type. Price comes back to it in the future, it's gonna be a good zone for selling. All right. Let's see. I want to see very clean examples. I'm seeing some ones, but I cannot fully explain to you guys because they are actually based on what? Experience. Okay. They're actually based on experience. Let's look at this one here. Now, if we look at this area, we'll say that okay, this is a good zone. This is a good zone for us to mark out another block. We can see very healthy candles there, right? You can see that we have very healthy candles here. Now, what are we expecting? Price has also come down. That's even breaking our structure. Very nice candle. So price should continue going down, right? Now, okay. Now, let's see what happens here. If price is going to go down or is going to turn the area to a breaker. Let's use 10x. All right, so price has broken through our breaker block. So what are we expecting now? Probably now this is going to become what? A bullish breaker, which means if price comes back to it, you can now buy and then we target higher prices, right? So let's see if price is going to come back to this breaker. If it does, we're gonna get in some buys. Let's see if so I have a question. If we are to rank it based on importance, which should we pay attention to first? The order block is always very good. Order block, yeah, breaker block mitigation. Okay, just as you put it, order block, breaker block mitigation. All right, this should be fast. This is not even fast enough. My God, we should come back quickly. I want to buy. I want to buy. I want to buy. I want to buy. All right, we are coming back. We are coming back. Let's see if we're gonna hit the breaker block. Now, if you notice, I mentioned that you can have something like an incomplete pullback, right? I mentioned that if you have an incomplete pullback, it's called inducement, but I don't want to talk about it now. Okay, so if price comes, hits the breaker, maybe we just hit the position. All right. Come on, come on, come on. Let's go. Come on. This guy don't want to come back in 2 months. All right, all right, all right. Good. I've entered 1 million positions. So that's just basically it. Now I mentioned about this one. This is an incomplete pullback. I mentioned that if you have your breaker like that, if price gives you a breaker and then it gives you an incomplete pullback like that without coming to touch your breaker, then it's good that the price will likely respect the breaker, right? But now if this first pullback comes down and even trades into your breaker, and then you start seeing price coming back again, like you can have something like this. You have your breaker here, price comes, trades a little bit into it, then goes up, and then it's coming back down. Then it's definitely coming for your order block. If at all the order block was not mitigated. All right. So I think that should be it. I don't want this session to be long, but if you have a question, you can quickly leave it on the comment section before we end the session. All right. So I'm already making $230. Okay. It's a demo account. It's just a backtesting tool on TradingView. All right. So if you guys have questions, this is very important. All right. You have to know all these things so that tomorrow price will not be buying from a breaker block and you're like, why is it buying from that breaker block? It was supposed to come to this one and so on, and be like, you understand? So all these things you have to put them into consideration. Okay. So we are making about $300 now. Let me just close. Let me sell off the positions. How many positions did I open? I'm selling them now ending. Yeah. Let's see. Hold on. All right. Okay. So I bought here and then I sold back my position here for a higher rate. That's how you trade, right? You buy something cheap and you sell it off when prices are high. And then you make your cool cash. Okay. You make your cool cash. You just make about 200 pages. Fine. Okay. So guys, that's basically it. And please don't sleep us because of those who are not serious. So how would I know a valid breaker block? I've just explained it now. This is the pattern. Okay. It should first of all be a good bullish order block. That's one thing you have to understand. All right. It should first of all be a good bullish order block. Now, when price breaks through it, and then gives you an incomplete pullback. Incomplete pullback is that the pullback doesn't come into the breaker yet, and then it moves back away. Now, when price comes back, it's a valid order block. Okay, it's now valid. Sometimes price will just come like that and then go down. But like I said, if this first pullback comes, wait for confirmation. But if it doesn't come, all right, if it doesn't come directly, then goes back, come back now, this actually validates it. I'm saying that you should wait for confirmation on the first pullback, because this first pullback can decide to go to the other block. Okay, so that's it for today. I'm going to stop recording. I don't know if you guys have more questions.